think you should.
Hey, what's going on, guys? This is Fire Trader from firetrading.org, and I wanted to go over one of our trades that we made this last Friday on NTNX. They had earnings. It was an earnings beat, and I want to dive a little bit deeper into it. I don't want to just go over our notes with you guys. I want to show you kind of exactly our thought process behind the trade, and why we were anticipating a pretty good move on it that day. Okay. So here's our notes. I wanted a quick poll out of the open right down here. This was a typo. This 2450. I wanted 2350. But once I post my notes, I don't go back in and change them. So once it was posted, it was posted. But I told everybody, in our pre-market discussion, I'm looking for 2350, not 2450. So, but we're looking for a quick pull and then watch for the bottoming and grab it long for a nice all-day push to the upside. Otherwise, if we get a pop towards 26, stop it off, let it consolidate, and grab it for the next leg to 30. So we're anticipating a nice all-day move to the upside on it. Now, I want to dive a little bit into why we were anticipating a big move on it that day. And we're going to be using our FIRE formula. The FIRE formula is a mathematical kind of formula that I created for earnings specifically. And it's to use the numbers that they provided as well as guidance and everything else to find the intrinsic value of the stock. What is the stock worth now after these earnings? This formula here, I send it, if any of our monthly members want a copy, I email it to them. But this is it right here. This is it. You go in, you punch in the price, earnings per share, revs, everything's got one for guidance. So I'll show you guys here how we made our trade on NTNX based off of this FIRE formula here. Okay, so the first thing that I do is I go in and I want to, so I know that it's gapping up because of earnings. Okay, so I can look at the earnings. Okay, great. They beat, 39 to 67. Great. The first thing I do is I go back and I look at their previous earnings. So I want to see, okay, last earnings they beat 69 to 88. So what I want to do is I want to use the FIRE formula to see if the stock is undervalued leading into the earnings that they just had. Okay, so now the FIRE formula is based off of the assumption that the stock price is neutral leading into earnings. Everybody that wanted to get into it got into it. Everybody that got out of it got out of it. So it's neutral. Okay, so what I do is I go back and I take the price of the closing price before earnings. So they reported here on the 27th. So the closing price was $24.41. So, right up here, I'm going to punch in $24.41. Okay. So now I'm going to look. They beat 69 to 88. So with the FIRE formula, when you start getting negative numbers, it could get a little bit confusing. Positive numbers, pretty straightforward. Negative, you kind of have to do it backwards. So basically all you're doing with this is you're trying to figure out the difference between the two. So we'll go 88 versus 69. Okay, so that's going to give us a new intrinsic value of 31.13. Now we're going to punch in the revs here, 318.3. 318.3. Oops. 318.3. And we're going to go versus 307.1. 307.4. So that's going to give us 25.28. So between the two, the middle is going to be 28.20. So that's going to be the new value of the stock, and that was last earnings. So I previously already had it plotted out here. Right here is going to be the value of last earnings. So we can see right here that we are undervalued leading into this earnings, right? We're sitting here kind of consolidating. We're down here at 21, 22 bucks, and the value of the stock is at 28.20. So we know that we're undervalued going into these earnings. So now the earnings that they just provided will do the same exact thing. What did it close at? 21.7. So, oops, sorry, I did it again. We're going to go back here. We're going to erase all this. So we're going to go 21.7. Let's go ahead and look at their earnings here, 39 versus 67. So same thing, negative numbers, a little confusing. So we'll go 0.67, sorry, 0.67 versus 0.39. Okay, so that's going to give us a new value of 37.28. We'll punch in the revs here, 327.9, 327.9 versus 319.9. 319.9. Okay, so that's going to give us 37.28 and 22.27. Between the two, 29.76 is going to be the new value. So I've got it plotted out here. 29, close enough. 29.77. But 29.76 is the new value. So these are the two lines to pay attention to. This line just indicating that we are undervalued going into earnings. This line is the new value of the stock. So the stock is trading at $21.70, closed at, and the new value is up here at 29. That's very undervalued, right? So now we just got to use our technicals. The next thing that I like to do is I like to go and I like to look at the 20-day hourly chart. Now, if you guys don't know about the 4 market phases, there is accumulation, upside acceleration, distribution, sorry, I had a brain fart, distribution, and downside acceleration. Okay, so you can see this is what I like to look at when we're looking at the hourly chart. We had our downside acceleration here. Now we're in the accumulation phase. This is the accumulation phase before earnings. So typically what happens is if you're in the accumulation phase during an earnings report, what will happen is the earnings itself, granted that they have good earnings, will transition the phase out of an accumulation phase into an upside acceleration phase. And that's exactly what we saw. Accumulation phase, bam, earnings transitioned into upside acceleration phase. Okay? So now this is all, now we just use our technicals, right? We've got this trend line here. We've got a nice gap between 26.30 and 32.30. And we've got this overhead resistance level, overhead trend line right here. Okay, and that's it. That's it. Look for a pull out of the open down to 23.50. I had to clear that up, which is that trend line right there. And go long. Go long. It's got everything going for it. It's undervalued. It's transitioning out of accumulation phase into upside acceleration phase. And we've got plenty of room. So now, the way that we traded it, right here. Next candle to make a new high. Came down into the support level, right here, long, over 23.50. Take it on up, take off a piece right here, 26.30. And bam, right up here into this trend line, and we're done with it. After that, had room up to the next, the value here, which it probably would stall out from there. But, you know, it was a beautiful trade. Beautiful 5-point trade. Yeah, that's pretty much it. That's kind of our little bit of diagnostics, little how we dissected it, and we traded it. I hope you guys enjoyed it, and have a great weekend.